Good evening, guys. Those of you that are online and those of you that are listening to the recording afterwards. So welcome to this evening's collab. So this evening, what I want to do is just give you some brief revision on your Learning Unit 2, the Debtors and Creditors Reconciliation Learning Unit, and just basically give you some background to the main concepts and to help you to understand those. So I'm going to just go and share my screen because I want to go across to another document first. Oh, why is that not going? Sorry, let me just go back. If I can get there. Bear with me. There we go. Share screen. Audio. All right, so in a minute you should see our kaleidoscope. There we go. And then I can hop over to my PDF. Okay, so these are just some extra notes on key concepts in your Learning Unit 2 Debtors and Creditors Reconciliation. So just some real basics, which is very important to make sure that you've mastered them and you understand them before you go on and try and complete questions themselves. So debtors and creditors. Always, again, just make sure that you 100% understand the difference between them. So our debtor is what we also call accounts receivable, which means people owe our business money. Okay, so they owe us money. That's our customers. So debtors would be our customers. And when we talk about creditors, those are our accounts payable, and these are individuals or entities to whom our business owes money. So those would be our suppliers. Okay, so debtors are our customers and creditors are our suppliers. And we're always talking about from the business's point of view. So remember, in our business, our customers are our debtors and our suppliers are our creditors. In our customers' books, we are a creditor because they owe us money, and their customers that they sell to would then be debtors. So that's something that you must remember, because that's something that I know students get confused with. So in our books, our customers are our debtors. In our customers' books, we are their creditor, okay, because we are their supplier. They are our customer. So always, that's why I'm using these words customers and suppliers, because I think that makes it easier. So whenever you're looking at a scenario or transaction and you have to kind of decide, oh my goodness, is this a debtor or is this a creditor? Just have a look from the business's point of view that you are processing that transaction for. Is that transaction with a supplier of the business or is it a customer of the business? And I think that will help you. So then we've got something else that's very important. So, okay, in our learning unit is called Debtors and Creditors Reconciliation. So just like in Learning Unit 1, we had bank reconciliation. So in Learning Unit 1 of the bank recon, we have to reconcile the business's records for their bank account in their general ledger with the bank statement from our bank, which is the business's records in the bank's books. And we have to reconcile those two to make sure that whatever the bank has recorded as having taken place in our bank account is exactly the same as what we have recorded as having taken place in our bank account. That's what a reconciliation is. We reconcile the two to make sure we know that they are exactly the same and we know exactly where the differences are coming from. So with a debtors recon and a creditors recon, we are doing exactly the same procedure, in other words, reconciling. But what we're now doing is we are reconciling our records with what we say we owe our supplier, and we are reconciling that with the statement that our supplier sends to us, which is the list of their records of the transactions with our business. So that is usually the reconciliation that you've got to do, is generally a creditor's recon, which is our own records regarding all the transactions with our supplier, with our creditors' records, with all of the transactions with us. So our creditors will always send us a statement at the end of the month. So just like the bank sends us a statement at the end of the month, and we reconcile that bank statement with our bank account records, when our creditor sends us their statement at the end of the month, we reconcile that creditor statement with our records for that particular creditor. And the procedure is exactly the same, ticking off our transactions on the statement with the creditor to see that they're the same, and then looking to see if there's anything that the creditor has got on their statement that we don't have, and vice versa, and also to make sure that the rand values of each transaction are identical. Exactly the same procedure. So we don't do a debtors reconciliation because we don't receive any record from our customers. There is something that the customers send to us, and that is when they pay us an amount off on their account, they will generally send us a remittance advice. So our customers will send us a, why is that up there? Sorry. Our customers will send us a remittance advice when they pay us, and that contains the details of which invoices they are paying and the amounts of those invoices. So we can then take that remittance advice that we receive from our customer, and we can check it against our records, our statement to that customer, and check to see that they have got the same amounts for the invoices that we have, that they haven't deducted anything or missed anything. Okay. So with our debtors, we'll reconcile that with the remittance advice received from them, and with our suppliers, statement received from our supplier. And that has got the details of what they say we owe them. Okay. So that is done on an individual debtor and an individual creditor basis. In other words, each individual supplier and each individual customer, one by one, that reconciliation is done. Then in terms of our total collection of all of the totals for all of our customers, those are all added up into one total that is then recorded in the debtor's control account. And this debtor's control account, which is an account in our general ledger, the total in that account has to exactly equal the total of our debtors list. And our debtors list is similar to a trial balance. It is a list of the name of each one of our debtors with the total amount that they owe us, all added up. So remember, the debtors list comes from the debtors ledger. The debtors control account is found in our general ledger. So remember, your debtors ledger is kind of like a sub ledger that sits on the side of our business. In other words, our general ledger is our main ledger that contains all of our different general ledger accounts, in which we record all of our statement of financial position accounts, balance sheet accounts, assets and liabilities, and statement of comprehensive income, in which we record all of our income accounts and all of our expense accounts. That's what makes up the general ledger. The debtors ledger is the ledger with the record of the transactions of each one of our debtors. And our creditors ledger is the ledger which is made up of the individual records of each one of our suppliers. So the total of the debtors ledger must exactly equal the total in the debtors control account in the general ledger. Okay, so debtors control account is an account in the general ledger of our business that reflects the total amount outstanding by the debtors book. The debtors ledger is also known as the debtors book, and the balance of this account, in other words, the debtors control account, must be equal excuse me, to the total of the debtors list. And then we've also similarly got the creditors control account, so that's for our suppliers. So again, the creditors control account is the account in our general ledger of the business that reflects the total amount outstanding of all of the creditors of the business. And the balance in the creditors control account must be equal to the total of the creditors list. And that creditors list will come from what we call the creditors ledger, which is that little sub ledger that sits on the side of the business, recording all of our transactions with each individual creditor. So the only account related to all of these suppliers that we deal with in our general ledger is the creditors control account. And that account holds the total of all the amounts that we owe. The creditors ledger contains the records of each individual supplier and all of the transactions with each of those suppliers. Okay, so if you look at your textbooks, these page numbers are not quite right anymore. The control account system, the need for individual accounts, is on page 28, and 2.2, the control account system, is on page 28 in your textbooks. So you can also go and have a look over there in your textbooks for that. So here they've given us again, just highlighted for us, and this is, again, it's just because it's an area that the students do kind of get confused with. Important to remember that the individual debtors and creditors accounts, in other words, those records of all the transactions with each separate debtor and each separate creditor, are not listed on the trial balance. In other words, they don't appear in our general ledger at all. The only accounts listed in the trial balance will be the debtors control account and the creditors control account. And then it's our job as the accountants to reconcile the transactions that we have recorded in the creditors and debtors ledgers with our debtors and creditors control accounts to make sure that the total of the creditors and debtors lists, when we add that all up, does equal the total amount that we've got recorded in those two control accounts. Okay. So you must just sit and think about that and make sure, just let that sift through your mind so that you think about it and make sure that you understand that, and draw a little diagram if you need to, so that you can make sure that in your mind you've got separated the general ledger as a separate entity from the debtors ledger and the creditors ledger. Okay, so something else I want to just go over with you guys is this concept of set-offs, because it's not really explained that well in or that in detail in your textbook. So what happens in business is that quite often somebody that is one of our customers that purchases from us could also be somebody that we buy goods from as well. So in other words, we would have a record in our debtors ledger with this person containing the transactions from the sales that we've made to them. And then in our creditors ledger, we've also gotten an account with them regarding all of the goods that we've purchased from them. So when this happens, we can do what we call a set off, because then instead of us paying them the entire amount that we owe them and them paying us the entire amount that they owe us, we can set off the two accounts so that only the one amount, which obviously whichever one is the greater, is then paid over. So let's have a look at this example that they've given us. So let's assume that Tire World is a business operating in the retail tire supply industry, and they purchase their stationery from Super Stationers. So we've got two companies, Tire World and Super Stationers. So Tire World purchases stationery from Super Stationers. So they receive their statement showing that we owe our stationery suppliers an amount payable of 990 Rand for stationery purchased in February. Now let's assume that these stationers purchased tires from us. And this is for a total of 4890. So Super Stationers owes Tire World 4890, and Tire World owes Super Stationers 990 Rand. So what's going to happen now is that Tire World's bookkeeper is not going to pay Super Stationers 990 Rand because Super Stationers owes us more than that. So what they do is they, what we call, set the amount off against what Super Stationers owes us in the debtors ledger. So with that 990 Rand, we are then going to debit the creditors control amount and credit the debtors control amount. Okay, so Tire World owes Super Stationers 990 Rand. So this 990 Rand will be sitting as a credit in our creditors control account. So we want to debit that 990. So we basically are then removing that 990 from the creditors control total, and we are transferring it to the debtors control. We are crediting the debtors control account. So the 4890 is then going to be 4890 minus 990 Rand, which is 3,900 Rand. So now our books show Tire World owes Superstationers 0, and Superstationers owes Tire World 3,900. So we've set off the 990 against the 4,890 so that only one amount is owing. And then Tire World will pay Superstationers 3,900 as one payment, instead of Tire World paying Superstationers 990 and Superstationers paying Tire World 4,890. So that is what we call this concept that we call a set off. That does sometimes come up in questions in your textbook, or perhaps in exams or assignments. So I just wanted to make sure that you guys understood that. The tricky part with this one is obviously working out what you must debit and what you must credit. So just carefully have a look at this example and go through it, and then I'm sure you guys will get that correct. I don't want to go over that one. Okay, that was just another. Let's just have a quick look at these accounts in the ledger. So here's an example. We've got a company called Jared Traders, and they've got the following accounts in their debtors and creditors ledger. So they've got a debtor called Peter Pan. So in other words, that's one of their customers. And they also owe Peter Pan some money as well. They purchased from them. So the debtor, that's Peter Pan, as a customer. And this one over here is Peter Pan as a supplier. So they owe us 1,000 Rand. And we owe them 850 Rand. So again, you have a look to see which is the larger amount. So they owe us 1,000, which is more than what we owe them. So we are going to take this 850 and transfer it from creditors control into debtors control. So remember, creditors control is a liability, so it is a credit balance. So in order to reverse a credit balance, we're going to have to debit the creditors control, 850, and we will debit debtors control, 850. Sorry, did I say that the right way around? Creditors control is a credit, so this 850 is a credit and we want to reverse it, so we're going to debit debtors control. Hopefully that's what I said. We're going to debit, we are going to debit creditors control, and we are going to credit debtors control. So by debiting creditors control, this creditors control will go to 0. We're going to debit it with 850. So credit 850 and debit 850 equals a net amount of 0. And then we will credit debtors control 850, which will leave us with a balance of 150 in our debtors control. So Peter Pan then only has to pay us 150 Rand as one transaction to settle both of these accounts. All right, so then I wanted to just take a quick look at question 2.1. So in your textbooks, let me quickly find this, you'll find the question on page 37 in your textbooks, and you'll find the solution on page 247 in your textbooks. And again, I'm just going to take a quick look at some of the solutions, just to explain some of the concepts to you, to make sure that you understand them. So if you have a look at the question, and this question is quite similar to the question in your assignment that you've got to do. So in question 2.1, we've got Zilla Hardware buys and sells a variety of hardware goods, and they use the periodic inventory system. Please always take note. They will always tell you whether we're using the periodic inventory system or the perpetual inventory system. The business is a registered VAT vendor, and it's the policy of the business to buy only from other VAT vendors who are able to provide tax invoices. So that tells us that all of the transactions will be including VAT unless VAT is not applicable, and VAT will not be applicable if it is an exempt or a zero rated item, or if it is a non-allowable item and we're not allowed to claim the VAT back. So remember, you must make sure you go back and memorize your Learning Unit 3 from 1A if you've forgotten your VAT categories. So then they gave us the list of the debtors list. So if you look at page 37 in your textbook, it says their list of balances in the debtors ledger of Zilla Hardware. That is an example of a debtors list. Lulu, Crank, Yong, and Hona. So that total is 49,780 Rand. So that is the total that, as at the 31st of May, would also have appeared in our debtors control account, showing that our debtors list reconciled to the debtors control account in the general ledger. Okay, so we reconcile the debtors ledger to the general ledger. Then they gave us the transactions that took place during the month of June. We've got the debtors journal. So remember, the transactions that take place in the debtors journal are our invoices to our customers. And then over the page, on page 38, the debtors allowances journal. So these are credit notes for when our customers returned goods to us. So that's basically a reversal of a sale. And then we've got the cash book receipts, which in the debtors control column of the cash book receipts tells us when our debtors made payments to us on their account, paid off money on against their account. And then we've got the general journal, which contains the sundry transactions that took place between our business and our debtors. So if you have a look at the general journal on page 38, the first transaction, settlement discount. So our customer Lulu paid us and they took 5% settlement discount. So the actual payment that they made to us will be recorded in the cash book receipts. So if you have a look at the 11th of June, you'll see in the cash book receipts there is a receipt from LU2. And then in the general journal on the 11th, we then recorded the discount so that we reduced the debtors control amount by the discount that we granted them, as well as the cash amount that they paid us. Then the next transaction is balance transferred. So that is an offset amount, an example of offset. We've got our customer K Crank, and we also purchase from them. So there's an amount in our creditors control and our debtors control account with that company K Crank. So you can see there we are debiting creditors control, which means we are clearing the amount that we owe them, 36,738, and we are crediting debtors control, which means we are reducing the debtors control amount by the amount that they also owe us. Then the third transaction in the general journal is an amount written off as irrecoverable. So that's a bad debt. Our customer J Yong has gone bankrupt and they aren't able to pay us. So we have to write off that full amount. We have to clear it out of debtors control and expense it to the account credit losses and input VAT. And then on page 39, the last two transactions in the general journal, The top one is interest on overdue accounts. So our customer H. Honer, they paid us late, and so we are charging them interest. So we are increasing the debtors control amount by the 302 Rand because they now owe us more money because we're charging them interest, and we are crediting the income account called interest income. And remember, on that transaction, there is no VAT because VAT is never levied on interest. So interest income 302.67, it's just the interest that we are crediting, and we do not credit VAT output account as well. And then the last one is interest income, and that is a reversal of the interest. We charged them interest, but then they paid us, so we reversed the interest. So that's just a reversal of the journal immediately preceding that. But have a look at your the balances and the 3 journals and the general journal in your textbook. And what I want you to check between that is how those amounts are transferred here to our debtors control account. So this debtors control account, remember, this is our what we call our T account. It's the T's going across and down here. Okay, remember it's a T. Oopsie, sorry, that's not very neat. We call it a T account because it looks like a T. On the left-hand side over here, we write the amount there when we debit the debtors control account, and on the right-hand side of the T over here, we write down the amount when we are going to credit debtors control. Okay, so here's our T. The left-hand side of the T is when we debit the debtors control, and the right-hand side of the T is when we credit debtors control. So this is debtors control. So if you have a look at the 1st of June, the opening balance, opening balance, and have a look at the total of the list of balances that they gave you on page 37. Remember, I told you that that is your debtors list. That total is 49,780.99. Because it is the total of your debtors list, that's money owing to you, which is an asset. Debtors control is an asset, and when an asset increases, we write the amount down on the left-hand side, on the debit side. So that balance is going to, the balance brought down goes on the debit side. Remember, also always write this down so that you don't get it wrong. Your dead click. So debtors control, you have to be able to identify that debtors control is an asset so that you can then correctly use your dead click, where assets, DEAD, assets, increase on the debit side. Remember, the D at the beginning stands for debit, and these EAD are the accounts that increase on the debit side: expenses, assets, and drawings. And this one over here, the click, the C at the beginning stands for credit, and LRC are the 3 accounts that increase on the credit side, which is liabilities, income, and capital. So debtors control is an asset. Assets increase on the debit side. So my balance brought down for debtors must go on the debit side. Then we go to our first journal, which is the debtors journal, which is all of the invoices, credit invoices that we recorded for our customers for the month of June. So look at the total of the debtors control column. In total, we invoiced 142 Rand 871 Rand to our debtors for the month of June. So remember, the debtors journal details all of our transactions with our debtors and it summarizes those transactions into those column totals, and only the column totals are then posted into the general ledger. So the column total for debtors control, 142,871, it's also going to go on the debit side of debtors control, because when we invoice our customers, that increases the amount that they owe us, which increases debtors control. And we write under details sales and VAT, because debtors control column is getting the debit, and the output VAT column is getting a credit, and the sales column is getting a credit. So remember, debtors control is getting the debit, and what we write in the details column is the name of the account that is going to get the credit. So if we've written this on the debit side, this is the name of the account that's going to get the credit. So credit, sales, and VAT, debit, debtors control. And you must remember to write down under folio the page reference of the journal that you took this total from. So debtors journal 6. And that's given to you in the textbook on page 37. Then page over to page 38, we get to the next journal, which is the debtors allowance journal. So debtors allowances are the credit notes that we have granted to our debtors control. So credit notes reverse sales we've previously made, which means they reduce the amount of money that our debtors owe us. So if we're going to reduce the amount of money that they owe us, that must go onto the credit side of our debtors control account. So the total of the debtors control column from the debtors allowance journal is going to be a credit to debtors control, and the input VAT column will be a debit to input VAT, and the sales returns column will be a debit to sales returns. So in our debtors control account, we write the 22,000 on the credit side. We put the DAJ6 as our reference under folio, and then under details, in other words, if we are crediting debtors control with 22,456, we are going to be debiting sales returns and VAT. Okay. Then go down to your cash book receipts, which is our next journal that we're going to be posting to our general ledger. So in our cash book receipts, we've got a debtors control column, and that contains all of the amounts that we received from our debtors who paid us during the month of. So the total of the debtors control column, because this is cash book receipts, the main column of cash book receipts is bank. And when we are receiving money into our bank account, we will be debiting that bank account, which means that all the other columns to the right-hand side of the main bank column will be credited. So cash book receipts, debit bank, credit debtors control, credit output VAT, credit sales, and credit sundry accounts. So we are only posting to the debtors control. So we take the total amount that they paid us, 67,184, and we post that to the credit side of the debtors control, because when our debtors pay us, that reduces the total amount of the amount that is owed to us by our customers. And if I am crediting debtors control, I am debiting bank account. So bank goes under details, and then don't forget to put your page reference for the journal that amount came from, cash book receipt 6. And then we've got the 5 transactions from the general journal. So let's just do these quickly. I've already described to you what each of these 5 transactions represent. So the first one is settlement discount. So settlement discount must reduce the amount of money that our customer owes us. So again, we are going to reduce the asset. So we are going to credit debtors control, and we are going to debit sales and VAT, because when we record settlement discount, we then reduce the original amount of the sale that we made. So sales and VAT will get debited. Then in journal number 46, this was a balance transferred, and in this case we were crediting. Okay, this is there it is there. We are crediting debtors control, and we are debiting creditors control. The third journal voucher is journal voucher 47, and in this one we are writing off a bad debt. So we are also reducing the total value of our debtors control. So credit debtors control and debit the expense account credit losses and VAT. Interest, when we charged our customer interest, we debited debtors control and credited interest income. And when we reversed that interest, we then credited debtors control and debited interest income. So you can see this 302 and that 302 is what we call they contra each other out. So in other words, we recorded the interest charge, but then we reversed it. So it's as if that never took place. But in accounting, we don't go back over here and rub this out or Tipex it out. It must remain there to show that that transaction took place. And then in order to cancel it, we do the exact opposite to cancel that transaction out. So we debited it there and we credited it there. So the net effect is 0 to debtors control. And then also just take note for the folio reference for all these 5 journal vouchers that we recorded, our reference was General Journal 6. Okay. And then this one over here, just ignore this bank RD. This is an old version that I've got of this question, electronic version. And those RD checks, they don't include that in the textbooks anymore. So this debtors control account is really, really important, and you guys must make sure that you understand exactly how it works and which journals are posted to the left-hand side of the debtors control and which journals are posted to the right-hand side of the debtors control. So debtors control will be increased by the debtors journal, which are the new sales that we made for the month, and debtors control will be decreased by any sales returns in the debtors allowance journal and by any payments that our debtors made to us. And then in terms of general journals, that all depends on what the transaction was, whether it's interest or settlement discount or a write-off of a bad debt. It will depend on what the transaction is as to which side that belongs. Okay, so this debtors control, super important. You must make sure that, that you understand that it's an asset and that assets increase on the debit side and decrease on the credit side. Let me just write that. And to increase on the debit side and decrease on the credit side. Okay, guys, so that's the most important thing on this question that I really wanted to go through with you is this debtors control account to make sure that you understand it and that you can practice it. So I'm going to end off there with that and then stop this recording, and then I will see you guys in the next collab. And in the meantime, best of luck with your assignment. And remember just to let me have any questions that you've got in the meantime as you work on your assignment. Okay, thanks, guys, and have a lovely rest of your evening. And I'll chat to you guys again soon. Bye.